All right, let's talk about expectational order flow. It's been a while since I've done the expectational order flow video, but most of it, well, actually all of it, still holds true. Some of the terminology might adjust from the previous video because we talked about things like just areas of interest and potentially some other terms, but for the most part now it's like everything we're looking at is supply and demand, right? The thing with expectational order flow is heavily based on structure. So while supply and demand will come into play and liquidity concepts and all that kind of stuff, I want to do my very best to focus on the core concept itself, and that is expectational order flow, meaning higher highs, higher lows, lower highs, etc. Just, bearish and bullish structure and what the expectation for price is when price does something specific. Now, one of the things about expectational order flow that is so powerful is that it just has a pretty strong rate of accuracy in the sense that if it is to make a higher high and you're with trend, or even if you're against trend, right, you're typically going to get another higher high after you get that pullback. It's always possible that price will just kind of continue upwards without not pulling back that much, which again is why pro trend moves with expectational order flow is always best. One of the things that we'll get into is kind of like the model of it. There's not much to the model. It's literally just lines going, make bullish structure, bearish structure. But one of the things that we need to keep in mind is more or less the theory behind it, and why it's called expectational order flow. If price makes a lower low, the expectation for price, if it pulls back to make a lower high, excuse me, I always get this confused, or a higher low, lower high. If price is to pull back, right, the expectation is for that low to go and make a new lower low, right? So if price comes in, and now we can incorporate things like supply and demand, if price is bearish, the order flow is bearish, and supply is holding, demand is failing, that kind of thing. If you incorporate structure into it, don't really mind chalks too much in this, but structure itself. If you try to take a long from that demand while supply is in control and we're expecting a lower low, that might cause some problems, right? You might get a reaction. It might just be a catalyst for a pullback, right? You might get a nice little setup from that demand zone to go short. But chances are trying to take a long from it is not really going to end well for you. And this is something that's fractal. It happens on the weekly, the daily, the 4 hour, the 15 minute, the 1 minute, etc. Obviously, the lower the time frame that you go, the more expectational order flow failures you're going to get. Meaning, if you were expecting a higher high, it may produce a lower low and still might continue higher, right? These are the things that we just have to use caution with, and this is why we utilize a higher time frame. Anyway, I think that's enough on theory. One of the things that we have to, again, keep in mind is that the idea of reversals versus continuations. Most of you know that I'm a heavy continuation trader, right? Because I keep in the back of my mind at all times expectational order flow and just general, who's in control of supply and demand. Trying to catch a reversal is difficult because when it comes to structure and supply and demand, there's really only ever one reversal, right? Or two reversals, I guess, if you count both the highest point and the lowest point. Whereas continuations, right, there's multiple continuation trades within the leg, especially if you're pro trend. So a lot of times we hear, oh, well, I'm getting caught on the wrong side of the market. Price is trading higher, but I keep trying to short it. You need to ask yourself, where are you in terms of expectational order flow? Where exactly are your supply and demand zones? And just generally speaking, like, are you to bring into another concept, internal range liquidity? Are you just playing the internal range liquidity expecting a reversal, when in theory those ranges, those internal range liquidity, supply and demand zones, are typically just catalysts for pullbacks, right? They get a reaction, you get a shock to the upside, but all it is a pullback, right? So anyways, let's go ahead and get into the model itself. And again, when we go through examples, I'm going to briefly discuss other concepts, but it's going to be primarily targeted towards expectation order flow. That's going to be our focus. So basic concepts, right, as we've discussed before, because again, from this video to the last video, there isn't going to be a massive difference, but we get to incorporate some of the newer strategies that we work with and just kind of see how it all fits together. But anyway, if you have bullish structure, right, price has now made a higher high and a higher low, right? Let's say we then go ahead and we break the high, right? The expectation for price is to essentially pull back, right? Sometimes it doesn't, sometimes it just moons, and it is what it is, right? But the idea is that price in theory will pull back and could potentially come to this demand zone. Maybe there's a flip zone within here or something. And if you haven't gotten to that part of the video, the content yet, you'll get there, but I won't go too heavily into it here. Right, so let's just say it comes into demand. The expectation for price is twofold, right? There's an expectation that price will not break the demand zone, and there's also an expectation that price will break the supply zone, meaning this low here should hold. It should be the last line of defense. If price makes it all the way to the extreme, price should not close below it. There's a chance that price might wick it, right? Because there's always liquidity concepts and that kind of thing. There's always a chance that price might wick it, but in theory, for structure, it should remain either within the demand zone and push higher, right? Now, if price were to come up and maybe react to the supply zone, right? Because price took out this high previously, we have overall bullish structure. The expectation, even if we get a pullback here, is still for this high to go, right? So our expectation order flow remains. Now, if we draw this up, right, this would be our break of structure, our initial break of structure. For me, it's just an orange line, so bear with me, right? Here, another one, right? Now we can put in here a demand zone just so we can kind of understand, right? Again, the expectation is for demand to hold, right? Because demand is in control. That means the structure low will not fail, right? But the structure high, supply, which is not in control, the expectation is for price to trade above it. Now again, as price trades higher, it doesn't necessarily have to pull back, but more often it does, which you'll see in the examples that we look at. And when it does, it's going to do it could do anything. It could just trade into this zone and continue higher, could trade into a flip zone, continue higher, could trade into the extreme, right? We don't anticipate anything, we just react. Now, one thing you have to keep in mind is, again, the idea of trading reversals, right? You have the potential to trade reversals at basically just the extremes, right? These are the only areas that you can technically trade a reversal, meaning price was bearish and then it became bullish, or the other way around, right? So if we look at this, right, trading from a demand zone while demand is in control, right, and expectational order flow is bullish and we expect higher highs, is high probability, right? Setups and entries and whatever aside, just from a structural standpoint, this is considered the highest probability trade setup that you can get, right? This is going to give you the best possibility for a sustained trend, for price to break the highs, to give you a more confident target, right? These are the things that will line up, and these are the ones that you need to capitalize on most. Whereas if you're looking at a pullback, right, for example here, there could potentially be some previous structure, right, that might have your demands or your supply zones, right? That might give you, I'll just draw this down just to make it fit, right? It might give you an indication that you might get a pullback, right? But one thing we have to keep in mind is that if, let's say this took the low here, and we'll just say that just for the sake of throwing a chalk in there, that's a chalk. But in reality, what this is an expectational order flow failure, right? Originally, what we had was we had price with bearish structure. It made a lower low, and the expectation would be price to take to make a lower low from this previous higher lower. Man, I really don't have these out. These what is this? This lower high. Yeah, lower high. Jesus. Anyway, so right. The idea is this supply zone should have produced a lower low, but it failed to do so. That would be an expectational order flow. That means that price shifted order flow and now, in this case, has become bullish, right? Now, often that is because there's something that causes that to happen, and usually what that is a larger time frame demand zone, right? So when you look at expectation order flow and you look at supply and demand together, you can build the full picture, right? It might help you pick those reversals, right? But at the same time, price could have easily just ripped straight through this and then pulled back, right? Because in theory, what this is just a catalyst for a pullback, right? These supply zones don't necessarily mean that you're going to get a lower low, because this is the one that had the expectation for the lower low. But because it failed, these other supply zones up here won't necessarily give you a reversal leading to a lower low. More often than not, what it's going to do is it's going to come and it's just going to give you a pullback, and then price is going to continue higher, right? And that's the concept of internal range liquidity, right? But knowing this stuff is important because it helps you understand, well, where the reversal is going to come from, where my pro trend move is going to come from, etc. And then you react, right? But looking for a counter trend short in an overall bullish market can be tricky, right? That's just the way it is. Now, this is the whole concept, right? Pro trend moves are much more high probability. They're typically easier to catch, and they will typically produce faster and cleaner profits, as in price won't range as much, right? Whereas a counter trend move may be choppy. It's more or less shaking weak hands out of the market, right? A lot of people, as price continues higher, right, they try to sell it, right? They might try to sell it from here, but it doesn't make sense to sell it from here because demand is in control. The expectational order flow is bullish. Now, the other piece of this puzzle that we'll look at when we look at examples is complex pullbacks, right? So a complex pullback is essentially when you have structure and expectational order flow is more or less ranging, right? Price is just sitting within a range, right? What you have to do is you basically have to look at the previous order flow, right? Or I guess current order flow, but just understanding that as price sits within the range, the expectational order flow still stands. So if you have, let's say you have bearish, right, structure, and you're expecting a lower low and pullback, right? You're expecting that this pullback will not take out this high, and if price pulls back here, that it will not take out this high, right? That's the expectation. So if price comes into these levels, they're high probability, right? Sometimes price will come down, it will react to demand. You might get a pullback that reacts to supply, and you might get something like this. You might get a wick of this high here, right? But one thing that you'll notice is that price is still playing within this high, this high, and this low here, right? So price is just within this range. You might get higher highs and lower lows within the range, but the expectation should remain the same, where price is to produce a lower low. Now, what we'll do is I'll mark this up, right? The expectation is for lower lows, right? You have supply. Again, you still have supply, right? And then ultimately, the last supply that kind of leads price to take the lows. They're not the easiest to trade, and you can never really say for certain that you will be in a range or that you are in a range until you happen to find out kind of the hard way, right? And if you do happen to find yourself in these situations, right? If you take the shorts, typically what I like to do is I will hold the shorts, right? I might partial a little bit at the lows and then just hold the shorts. And if it comes back, it breaks me even, I'll try to get back in if supply is still holding, right? If supply fails and we get an expectational order flow failure, that would mean that price is probably trading higher, which could just mean again that we're in a much larger demand zone and that order flow is shifting to bullish, right? But we have to pay attention to what's happening. So if we look, right, being within this high and within, this low, right, price failed to break the low here, it failed to break the high here. This was just inducement, so it got swept. Price came down, it actually took out this little substructure low here, right, which is a good indication that price will maybe want to trade lower, and then ultimately it traded lower. So if you find yourself taking like a counter trend long, you're always going to want a full TP basically at the high. Whereas if you find yourself in a potentially pro trend short, you want to maybe partial out at the low and let it run, right? That would be the ideal situation. Now, that's complex pullbacks. They happen quite a bit. I know a lot of people in EU have been kind of wondering what's happening with the current range and that kind of thing. Now, typically you find these ranges in higher time frame supply and demand zones like the weekly or the monthly, where price doesn't really know what it's going to do yet, and it's more or less just building liquidity, right? Because if you've had like a massive push to the downside, you get a huge demand, there's no way that you'll have enough orders in the book to basically sustain another move to the upside. So what they do is they just sit in this range, they get buyers into the market, they get sellers into the market, and orders are just accumulated over time, and then price pushes up, prices down, pushes back up, and then so on and so forth. So yeah, right, so I got rid of that, didn't mean to, but it's not a big deal. One of the things that I do have to discuss as well is that when you have structure as such, right, one thing you have to keep in mind is that you cannot confirm a lower low, or excuse me, you cannot confirm a lower high until the lower low has failed, right? So for instance, if price is sitting within this range like this, right, this is the low that you need failed, right? Because you expect low to fail because you've recently broken some structure to the downside, right? The expectation is for a lower low, but instead what we get is we get a reaction to demand, price pushes up. Now what does that say about this high? Is this confirmed lower high, or is this our confirmed lower high, right? So because this is the low here, the new lower low, that was the previous lower low, that is our current lower high. So until this structure is closed below, this remains the lower high. As soon as price closes below this low, this is now confirmed as the new lower high, right? So again, that could mean if price pushes into demand, it fails to break lower, that this might just become liquidity, and price could potentially tap into this proper, like the true lower high supply zone and give a trade from there, right? So that's something that you have to keep in mind, right? The lower high or the higher low is not confirmed until the expectational order flow plays out, right? All right, let's look at some examples. We can look at EU. I don't want to start with the range. We can mess with that a little bit later, but we'll look at the weekly. What is that? I don't need any of this. Right, so we can go back a little bit. This again, oh, I guess this is the weekly. We'll just look at post-COVID stuff, because I think in the last video I looked at pre-COVID stuff. Right, so in terms of the weekly, right, you're not going to get as much data because the candles are much bigger, they cover much more time, and there's less detail, right, because obviously they're much longer candles, time frame candles. But we can kind of start within this. It's pretty messy though. Oh no, COVID's here. Sorry, excuse me. So what we're gonna do is we're just gonna look at this current price action, right? We have the lower low, which was confirmed here by taking out this one, right? This technically was our lower high. So what I'm gonna do is I'm just gonna map out with the path tool, right, what we were doing before. So we'll start with pre-COVID stuff. So we had a massive push to the upside, massive push to the downside. Now in theory, what we'd expect is a lower low, right? So you can see that price came down pretty aggressively, pushed up, and then it came right back down, but it failed to make a lower low. And when it came back up into the proper lower high right here, right, it failed to make the lower low. So this was an expectation order flow failure. Now, what we can see is that price pushed in this level, right? Made this higher low, excuse me, and then price pushed up. So because this failed to break this high here, it doesn't quite count as a new structure high or anything like that, right? So technically this is our low. This was just a reaction to supply, and then price pushed higher. Now again, the weekly, we might have to go to the daily because the weekly is looking pretty junky, to be honest. But anyways, we get the higher high, right? And then we get the higher low here, right? And you can see that price sits within a range, complex pullback, right? This here, these equal lows get swept. That is the lowest point, so I'll just say that's that there, right? And then what we ended up getting was, from here, we ended up getting a reaction to demand. The expectation for price was to trade higher, but instead of trading higher, it traded lower. So we had this that could have potentially been the new lower high, but it failed to take out the high, right? So this isn't a confirmed low. It's just, in this case, basically just liquidity. I know that this is a large range here, right? These are big kind of candles on the weekly time frame. So lower time frame is going to give a little bit more information, of course, but because this was the last higher high, and this was the last break of structure, this is our last higher low. This needs to be broken to confirm the bearish trend. So what price does is, when it fails to break out the high here, of course it takes out that low. That's not our confirmed low anyways, but once this low fails right here, right, with the body closure, that indicates that bearish structure. So from here we get the pullback, get that lower low, right? So we break this structure right here. We're currently in a pullback phase. It could potentially come into the supply here, or potentially just could trade lower. So what we'll do is I'm going to drop the opacity on this. Oh, sorry, there's two of them. Unlock it so I don't lose it. Right, and now what we'll do is we'll go down to the daily, And we'll focus on some more of the recent structure, right? This bearish structure, because this is the way it works, right? Everything's fractal. In your pullbacks, you're going to get bullish structure. In your pro trend moves, you're going to get bearish structure, because again, that's kind of what we're looking at. Now, what we can do is we can kind of study this here. We'll look at this bearish structure, the failure to break the high, and then the bearish structure leading, right? Now, what you notice is you see the lines. This is our weekly structure, but as you notice in the daily, there's much more detail, there's much more structure within it. Right, so at this point, right, we'll just kind of start. I'm going to change the color and just go to red. Right, so here we had this is what I'm going to do. Higher high. What's a high visibility color? Yeah, that's good enough for now. Blue. We have a higher high. We have higher lows. And lower lows. And we have lower highs. Because I cannot seem to remember these things for the life of me. Lower high. I don't know why they're so confusing to me. Anyways, right, what we have is we have a higher high. Oops. Higher high. Higher high. All right, I'll put these over here for now. All these are anchored. Bear with me. Our low. Lower low. Lower high. Okay, right. Higher high. Stay there, don't move. Higher high. Higher high, right? These are higher lows. Right? So this is current structure, right? Where we broke highs, right? I'll mark them up, right? Breaking highs. And what else are we doing, right? What's the expectation? As price is taking out the highs, it is also expected that price will not take out the lows. So in this case, what you'll notice is that the lows are protected. Price is not breaking them, right? Eventually, price does break it, and we get the expectational order flow shift, where price is now properly bearish, right? These are the things that we look out for. So after we made this higher high, you know, in some cases on the lower time frame, this might be considered a structural low, right? It's not a real pullback. Like you can see here, there's structure and then pushes up, structure pushes up. This one was just like one pullback candle and then it pushes the high. This is the kind of stuff that's slightly subjective and that you need to kind of study to understand what you're okay considering a high or low. Now, obviously, if you incorporate the chalk into it, right, the change of character, that's not necessarily a structural thing. That's more of a supply and demand thing, right? It's the first indication that order flow is shifting, right? That's something to keep in mind as well. But we're not going to focus on that. We're going to focus just on structure. All right, so we make the higher high and then we make a lower low. What happens after the higher low level breaks? Price gives a pullback, which leads us to a lower high, right? So now if we look at the way structure has been forming, we've had this, that, higher high, and then we broke and closed below the previous higher low. we get the pullback, which is expected, right? But once this happens, right, and let's say we're able to catch something nice kind of up in here, right? The expectation for price is to do what? Make a lower low, right? That's what we would expect from price. And after we make the lower low, what's the next expectation? For price to pull back, right? So when it comes down to it, again, when we're looking at reversals, the best reversals you could potentially play if you wanted to are just the pro trend ones. These guys here, right, in this case, right, when we're looking at the longs, price coming into like this demand zone, high probability, really nice target because you can take the high, right? You can even let a little bit run and you can potentially trade higher, right? But we don't know when the reversal's coming, right? We don't know when price is going to pull back. We understand that there's a better probability of price pulling back after it takes out the high, but we don't know when that is. Like, for example, like if you look down here, right? Look, price took out this high. Did it pull back? Right? You see these candles, these sell candles, they pull back a little bit, but like this didn't really give us a pullback until like right here. So it could have happened here, it could have happened here, it could have happened in this wick in the supply zone, but it didn't, right? So trying to catch price on the wrong side of the market when it's bullish is risky, right? And that's the whole point of expectation order flows, is understanding where the risk is and the highest probability areas to take the trades from. So of course, once we made these lower lows and the expectation order flows failed and now supplies in control were bearish, however you want to look at it, right? You want to take the high probability pro trend moves here, right? Lower low, price does what? It pulls back, right? So when you're looking for a counter trend trade, where's the best place to take a counter trend trade? After the expectation order flow has played out. So if price takes out the low, you can then look for the long if it sets up, but you need to figure out what that criteria looks like for you. How does it fit your plan, right? You say, okay, price is bearish. The only time I'm going to take a long, I won't take a long if price reacts to demand while supply is in control. I'm going to wait for that demand to fail to tell me supply is still in control. And then I will take the long if it sets up after the failure of that lower low and expectation order flow plays out, right? You can take a nice long from here if it sets up, and then you can go from there. Now in this case, right, this huge wick, I'm not sure what that's about, but it uses some of this as liquidity. I'm not going to go too deep into that, but what you'll notice, right, if this is the true lower high, did price actually close above this? No, it just wicked it, right? So type 2 mapping and structure would suggest that you need a body closure for that order flow to shift, right? So in this case, sweep of liquidity, what did price do? It fulfilled the expectation order flow. It just kept going down. So I'll mark this up as liquidity. I don't know if you have gotten to this point in the course yet, so I'm just going to leave it for that, and then you can come back to this and try to study that if you want to. But as of right now, we have a good success rate with expectation order flow. I'm not sure if this came into a higher time frame supply or what, but that's okay. Right, so we make the lower low, we get the pullback. Now within this, we get a little complex pullback, right? Because what does price do? It comes down, but it fails to take the low. Price pushes up. You can see this might have thrown some people off. It wicked the high, but it didn't quite close above it. Now, caveat, on a lower time frame, that wick could be a body closure, right? So we need to assess the expectation order flow in the lower time frame to see if it did close above it here, did we then get another shift in expectation order flow where it came back to the downside, right? But for this time frame, it failed to take out the high. It wicked it, sure, fine, but it failed to close above it. And then ultimately what happened is this, right? I'll just mark it up as here. Price then came and took out this and made a lower low, right? So the expectation for a lower low played out. Right, so at this moment, we had 1, 2, 3 expected higher highs, and we got them. We expected the lows, the higher lows, or the demand zones not to fail, and that was fulfilled. Eventually, the lower low failed, and then from there, the expectational order flow was for lower lows, which in this case, after the first one, we got 1, 2, 3, right? So there's a lot of opportunity in trading with the trend, right? Just keep that in mind. And again, what happens here, right? After we take out this low, after we take out this low, what does price do? It pulls back. And it doesn't pull back all the way. It doesn't pull back super far. But if we look at the lower time frame, I'm sure there's something within this, like again, a flip zone. And just if you haven't gotten there yet, a flip zone is basically when price comes into a demand zone, you get a reaction, price then reacts, and then that demand zone fails, right? That reaction itself becomes what we consider a flip zone, which can be used for POI selection or entry, right? And in this case, it looks like what happens is that price does something like that, and you get a reaction, and then price ends up making the lower low. So, right. So this becomes the new confirmed lower high, right? Because price didn't take out this. This is the one that led to the break of this one. That's our new lower high, right? And then price comes here. Now, after this low, what's the expectation, right? The pullback. Our lower high is still here. Price has to break this low before this becomes the new lower high. So eventually price comes down and we break that, right? So now if this were to fail, which obviously it does here, that means the order flow is shifted, right? And then you just keep following that suit, right? Over and over again on every single time frame. And if you can find the expectational order flow and you can trade with the trend, I guarantee you, you're going to be very profitable, right? A lot of it's going to take patience, though. You have to understand when you need to trade from the extremes, right? Because when you're trading from the middle, right? And what I mean by the middle is if this here is we'll just look at whatever, we'll look at this structure, right? That's your high, that's your low. There's everything in between this would be considered a continuation, right, on the lower time frame. Now, apparently I can't control Z. That's what the issue is. Sorry. Yeah, so essentially what we're looking at is we're just looking at price coming in, making these lower lows, but everything within the leg on the way down to the lower low would be a continuation trade, right? If you were to trade from the extreme, that would be the reversal, right? There's only two, whereas continuations are probably a lot more. So just keep that in mind, right? Don't always look for the continuations, and don't look for the reversal in the middle of the leg. We call that diddling in the middle, and honestly, it's going to get you screwed over because you might find yourself in a decent looking setup, and it might work out depending on where you take your profits, but there's also a good chance that it's just going to come right back, take you out, and then continue in your direction, right? So it's better to trade from the extremes. In my personal opinion, that's typically what I wait for. It also gives you just a little bit more patience in the market because you're not going to do very well if you lack patience. So anyways, right? So price comes up, lower high, lower low. The expectation for price is to come into this lower high or this supply zone and do what? Give us a lower low. But instead, price fails to do that. This lower high fails. So now we have an expectational order flow failure, which means what? It means we're bullish now. It means demand is back in control. We need to figure out how to play it. Now, what you can see is we get this little reaction here. You can maybe qualify this as a low. It's not really structured, but you can see there's 1, 2, 3 candles that failed to take out the high, and then it continues higher. So we'll just qualify that as such because it's also a flip zone, but that's okay. Price does what? Higher high, right? Higher low, higher high, higher low, higher high. That's not a higher low, right? Because how do we determine if it's a high or low? It has to be confirmed by a higher high, right? So I'm going to pause that there, right? And we'll just mark this out. Bring these over, right? Higher high, higher high, higher high, higher low, oops, higher low, and no, that one doesn't get it, right? Sure, you can count that one, right? But again, what happens? Expectation order flow, right? After this high failed, yeah, it would have been real nice to get into this, but it wouldn't be expected. Even if you took this pullback into this level, you would have TP'd here because the expectation order flow would have told you that this is the pro trend move to short from here. Obviously that failed. My guess is because this tapped into some larger demand to the left. See this range right here? This is probably a monthly or weekly demand. That's September 28th. Yeah, November 10th. So this is basically a large demand zone. That's what price came into right here, right? So incorporating supply and demand into expectational order flow will help you understand better what you're expecting, right? Because if we look back, right, don't forget the higher time frame. What was the weekly expectational order flow? A higher high, right? So as soon as we hit this demand zone right in here, right, we should have known that lower lows were probably unrealistic, right? And we can expect potentially that expectational order flow to fail, and we can look for the longs. Now in this case, we would have gotten that failure right in our face because we should have expected a higher high here, but we didn't get it, right? And as we know from this data right here, we ended up getting lower lows, which again is fine. But what do? You just trade with the expectational order flow. So in this case again, right, if this was your previous higher low, that was your higher high. Yes, we have a chalk in here, but we're playing with structure. Just keep it in mind, right? Let's see, that's the higher low. We'll just mark it up as such. You know, I want to mark it up fully for you guys so you know it makes sense. I don't want to lose you. Right? Potentially higher high pullback. Let's just count it. It counts. All right? Because we had 1, 2, 3 candles here that failed to take out the high. You could consider a pullback. It's not great. It's not structural. But if you want to see it that way, what you would say is, okay, you made the higher high. We should have gotten a higher high from this level, but price closed below it here. It wicked it here, but it properly closed below it here. This was the first indication of bearish price action. However, if you say that's too aggressive for me, then you would say, okay, this is my previous higher low that I essentially expected price to come into and then give me a higher high. It failed to do so, so now my expectation order flow is shifted and we get a lower low, a lower high, a lower low in, yeah, because this one wicks it, doesn't close it, right? We'll mark it up, right? Wick, closure here. This one closes below this one, but just barely. That's okay. Lower low, higher low here, right? Because this technically did close below it, so we got to count it. Let's see. This is where it gets maybe a little tricky because we also have a closure above it here, right? Both of these closures are not great. I know that we talk about it in the structure videos. That is better if there's a little bit more conviction in the closures. So, you know, just study this type of price action, see what you're okay with, and then go from there. Now, if we're going to say that this was a body closure and we should have expected lower lows like we did, we have to say that this was a close above the lower high and we expected higher highs from like this demand zone or something, right? And then of course that fails. No problem. We're going to take losses, right? So we're going to say that this made a higher high, right? And then we didn't get that. This failed, right? So we'll just talk about that. That was just a sweep. That was you know, the one time out of all this structure that it didn't quite play the way we would expect it to, right? But like I said in the first video, I think my expectational order flow, generally speaking, is like you're going to get 4 or 5 expectational fulfillments. Like you'll get those lower lows and then eventually it'll fail. Usually when it fails, it results in an actual reversal, but in this case it didn't happen, right? Now, one thing we have to keep in mind is this. We were expecting a higher high from this level. We did not get that higher high. Price came into this demand zone right here. That was the reaction to the demand zone, right? So as price reacted to the demand zone, what did it end up doing? Reaction. It swept this high, right? And then that demand zone failed. And then what did price do? Came right back into this level right here. Now, again, some of you guys might not be here yet, or at this level yet, but this is one of the highest probability setups that we have here. I cover a lot of it in my trade recaps and commentaries, so you will get to this stuff. But basically what we have here is demand gave a reaction while supply ultimately was in control. Supply showed its hand by demand failing, and then this here, this little level right here, basically it doesn't sweep any liquidity, so it becomes liquidity. Price uses it, takes out the high, right? This might confuse some people and say, oh, well, it's bullish now. Takes out the high, taps into this level, right? And then it drops to the downside. But regardless, right? The idea is from expectational order flow standpoint, we made the higher high. That higher high failed to make produce a higher high from this one here. So you have a lower low, which I guess technically you would also consider a higher low, right? Jointly. And then price just tanks below it, right? So then what do we get? We get a lower low here. Actually, let's see. If that's the high, this becomes the lower high as well, right? So we know this is a sweep, so I'm just going to get rid of that for now. So that becomes our lower high, which results in this lower low, right? Price comes into that lower high. Where are we? And then, oh, sorry. And then we make a lower low, right? We're breaking structure. Break structure to the downside. This becomes a lower high, right? This becomes a lower low. I think you guys get the point at this point, right? And then, of course, this breaks, right? And then we now have, oh, this current price. We now have the lower low. We have the lower high. We have the lower low here. Right, so as it stands in terms of a daily structure, this is our lower high. As of right now, price is in like this very thick range where I think a lot of people are confused as to what price is doing. And I think if we look at the weekly again, just so you know, what we have here is supply, reaction, break of supply, and we have our flip zone, right? So this is a weekly flip zone, which is high probability demand, demand, right? So prices come down, it was bearish. Now it should have given us a lower low here, right? That's the expectational order flow. It failed to do so, it reacted, it pushed higher, and now it's come right back into this reaction zone. And I think that's why price is more or less kind of flopping around here, is because there's a very good chance it's going to run bullish. All right, so now that we're on the 4 hour, we can kind of look at how price came into this weekly flip zone, right? And we'll look at the expectational order flow in terms of where it went from bearish to bullish, right? Because I think that's what's happening now. It's, you know, price is ranging within this level, and it's kind of confusing to some. But if we can pay attention to the expectational order flow, understand where the lower lows were expected and then the higher highs were created, we can kind of go from there. So, you know, we'll start from the top. All right, we had lower lows, right? This was a higher time frame lower low. I'm just going to remove that for now, right? But in terms of the 4 hour, we had lower low, right? Lower low, lower low, right? And then so on and so forth. And we had a lower high, right? Lower high. And these are confirmed because once these lows broke, right? Price closed below it, forming the new lower low. That confirms this as a lower high, which also would have been a really nice entry area. You also have this lower low, right, which does not pull back very far. This, again, I know I've said it a couple times now, but when you have price and you're trying to maybe look for a reversal, right, on a counter trend move, this is why it's so risky. Like, you don't know when it's coming. Like this reversal came immediately after breaking the low, came right back up. This one broke this low and then nothing happened, right? It came here, gave a very slight pullback, but ultimately it didn't pull back very far. So even if you were to catch a long within this, granted it's the 4 hour, 15 minute, 1 minute might have presented something, but on the 4 hour, you're not really getting too much, right? And then of course it just drops to the downside. But that being said, it does form a nice pullback. You get a nice break there, and then you get a new confirmed lower high, right? Now the question you have to ask yourself, do you consider something like this a pullback, right? Or not? Now, you have to, I don't know if you have to necessarily qualify the amount of, or quantify the amount of candles in a pullback or the range within a pullback. Some people like to count pips or anything like that. For me, it's typically just visual. If I can, from maybe just experience or just seeing it over and over again, I can qualify something as a pullback. Like, for example, like price came down here and price pushed all the way back up here. There's more structure to it. I can qualify as a pullback. Price broke the low here. It pulled back, right? It came back with enough momentum, give it some structure, right? Even here when it pulled back, right, there was enough. These are all 4 hour candles, so this is a long period of time where price attempted to push back down but failed to do so, and it pushed up, right? Here, this is just kind of like a price pushed up and then pushed right back down. So I wouldn't necessarily call it structure, right? So I wouldn't qualify this as a lower low. I'm sure on the 15 minute, maybe there's something. But in terms of of course it's supply, right? So that's why price comes in here. So, you know, but we're not looking at supply and demand too much. So anyway, so we have the lower low here. And we have this lower high is confirmed by the break of that lower low. Sorry if you can hear my kids screaming. I had to finish recording this in the morning. Right, so here, right, this is where that lower low broke, right? Price closed below it. Here you got a wick, right? But here was the actual body closure. And then what do we get? A new lower low. Whoops. New lower low. And then, of course, that one breaks right here, right? After you get a nice little pullback, right? Lower high is confirmed, right? This guy right here, that's the pullback, that's the high. So next thing that happens is, of course, now price is pretty deep in this weekly flip zone, right? So here we get the change of character. So it takes the low and it takes the high. This lower high has now failed. So the expectational order flow is now shifted. Right, so this is something that we have to keep in mind. So price comes down, we get a pullback, right? But we fail to create a lower low. Instead, what happens is price pushes to the upside, and we now get a higher high, right? If anybody's wondering how I'm just using this as templates and copying and pasting, I just hold control and then click and drag, and it'll duplicate it. Move these over. All right, so this is where it gets tricky, right? When price is in a range, sometimes it's going to create clear structure to the upside or downside. Sometimes it's going to take the highs, take the lows, take the lows, take the highs over and over again, and then that's kind of a problem. So what happens here, right? We've now taken out the high, so we confirm a lower or a higher low, right? Higher low, right? That's our higher high. Now, this is the part where it gets tricky, right? Because if this is our confirmed higher low, obviously we get wicked through right there, but then price goes and takes out the low, right? So then what do we get? We get a lower low, right? You just follow the expectational order flow, right? And hopefully by this point, once you kind of see that you've taken out the highs, but then you've taken out the lows, you might want to more or less look for potential range price action. So you want to trade from the highs, trade from the lows. If you look at this, right? If you look at this from a premium and discount point of view, right? What you'll notice is that when you get to the highs, typically price gives a decent reaction to the downside. When you get to lows, it gives a decent reaction to the upside. However, if you find yourself in the middle of the leg, right, you can see how often price interacts with the equilibrium, right? It's not ever really too sure what direction it wants to go in, right? Here you can see again, it bounces off of it, drops below, pushes back up, bounces off again, pushes up, pushes right back down. This is where people lose their shirts, right? Like this is where people take losses. You don't want to mess around in the middle of a range. You need to work from the extremes. Try to understand the expectational order flow, like is price shifting higher, is it shifting lower, and try to work with that and then go from there. Now, right, so we created the lower low, right, and then we pushed right back up. We pushed into the previous higher high, which is also simultaneously now a lower high, right? So there it pushes into your lower high or your supply, right? Price pushes down, and what does it do? It fails to take out the low, right? It never takes out the low. It wicks it here, but it doesn't close below it. So our expectation for price after this one should have been a lower low. Our expectation for this one after the higher high should have been a higher high, right? So when this is the case, right, again, you just trade from the extremes. So in this case, we expected a lower low. We did not get a lower low. We traded within the range, right? We could have kept taking shorts into this, expecting the low to go. Eventually it does not go. What we end up getting is we get a higher high because price takes out this high here, right? Body closes above that. So now the expectation for price is shifted again. We're expecting higher highs, right? So if this is a higher high, where is our higher low? This guy, right? So in order for price to be properly bearish, we would have to take out this level right here. We'd have to close below it. As for now, anything within this lower range is fair game for demand to trade higher, right? But of course, what we'll probably end up getting is we'll probably get a break of this structure here, and then we'll probably confirm a higher low somewhere within this range here, right? So if price were to then go up above and pull back here, 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 just like that, right? That's kind of what we'd expect. And the reason we can expect this at this point is more or less just because after a range doesn't last forever. A range will happen and then it will trend, and then it will range again, and then it will trend, right? Depending on how big or how important that demand or supply zone is, price may range a little bit longer. Because again, if price does want to push to the upside, right, and take out some of this liquidity here, all this internal range liquidity, it's going to require a lot of orders. The other thing it could very well do is it could just push right back up and push right back down, because if we look right at this kind of opaque trend line that we have on the higher time frame, right, we'll go back to the weekly. I know it's a little messy, bear with it. Right, if I open this up, right, what we'll see is that that structure, what we're expecting potentially, now again we have to consider this flip zone, this weekly flip zone. One of the things that we can expect from expectational order flow in this previous structure is a lower low, right? An overall lower low, but we have to keep in mind that this is a very important demand zone. So we'll keep that in mind. We'll kind of use that going forward, and we will go from there. But let's go ahead and look at AU, because the structure on AU is really good. Here, we'll look at this bearish to bullish structure and then to bearish structure real quick. We'll just map it out together, right? And again, I do have to do the higher high thing because it really helps me. I can't seem to just articulate it without thinking about it or seeing it. Lower low. Lower high, right? And when you're studying expectation order flow, which you should be taking every single concept that we talk about one by one in a silo and practice them individually, right? You can't just watch like 5 different videos on 5 different topics and then try to piece it all together. That's not how it works. You have to make sure that you stick to one thing, try to master, at least get a really strong understanding of it, and then move to the next thing, study that individually, and then add the last 2 things together, right? And then you want to learn the next topic, learn that individually, and then try to apply it with the other topics that you've learned, right? That's how you properly study anything, whether it's school stuff or trading, right? Or whatever. Anyway, right, we had basically we had a higher high, right? Higher low. Sorry, that's not the higher low because it didn't break the high, right? This is more or less just a failure to break the high. This low right here goes, right? We get a closure, and then what does price do? Price pulls back. Now our expectational order flow at this point, right? We had higher high, higher high. This was our higher low. This was our break, and our closure was right there, right? So this was the first kind of expectational order flow failure in this bullish leg. And then what do you notice, right? It didn't continue higher, right? Don't ignore the signs. Price isn't going to just magically, keep going higher from here. Another way to look at this is you have internal range liquidity, right? Which is another thing you look at. Basically, all these lows, while they're demand zones, they're just internal range liquidity, which means the demand zones within this, or potentially the areas beneath them, are just going to give you pullbacks, but they're not going to just reverse price to the upside, right? You'll learn this from Brad in the internal and external range liquidity videos. But right, so that's our first level of expectational order flow failure. And then what do we get? Price pulls back, right? And then we get a lower low, right? We get a lower high, lower low, lower high, right? So let's map it out. That lower low, I think, I can't really see, does this actually close below it? Right there, that's where it closes below it, right? So we have price push down, we get the lower low here. Actually, this is the lower low right here, because this is where price actually closes. You get a little bit of a pullback, whatever. Lower low, pullback, lower low, lower high, lower low. And then what you'll notice is that price again does what? This is a good example. Price fails to break this low, but where's our previous lower high, right? Let me mark it up. Lower low. And we'll cut it off soon here because I think you guys get the idea. But I want you guys to see how powerful this stuff is, because you could literally just trade based on this, understand your supply and demand zones, and then just take 15-minute entries. You don't have to trade the 1 minute. You don't have to get all, like super awesome guru lifestyle, like mind pulsing, like super knowledge god. Like just trade what you see, right? You don't have to be like a top tier mastermind to understand structure, right? You just have to trust your analysis and understand that if you get a lower low, you're probably going to get another one. It's really that easy, right? If you want to catch yourself on the right side of the market, just use expectational order flow. Don't forget it. Right, so these are our lower highs. Lower high, lower high, lower high, lower high, right? That's the high we're trading from. That's the low that we're trading from. The expectation for price is to trade lower, right? But you can see price ends up just sitting here reacting to demand, right? If supply is in control and you get a reaction to demand, that reaction is often just building liquidity, right? So you can see that this is the first reaction. Price pushes up, pushes down, fails to do anything again. And price does what? Price just takes out the high and it just reaches into this lower high, the extreme, right? And then you get a nice little trade. You might have broken even on the way back, but that's okay because you can just get right back in here. And then what happens? You get the expectational fulfillment for a lower low. And then what happens? Price pushes back, right? You get that pullback. Maybe you try to get back into here because you know that you can expect a lower low. And now you have a confirmation for a new lower high, right? Because this low getting taken out confirms that that's your lower high, right? So you should expect a lower low. But what happens? We don't get it, right? The lower high fails and we get a shift in order flow. Where is it? Boss. And then what happens? Order flow shifts, right? So within this, right, we had basically we had this whole little complex pullback situation happening. That's our true lower high. That's our true high, true supply zone. Price comes up. It fails to make the lower low. It actually just ends up coming here, taking out that high. It closes above it right here. You get the pullback. Boom, right? And even if you look at this, right, the very first sign of expectational order flow was this body failure, was this body closing above it, right? You get a wick, you get another wick, body closes above it. Where does price come into? Right into that demand zone. You could have taken this as the very first expectational order flow failure because you feel confident in the data, right? You feel confident. You've done this so many times that you know that when you get that expectational order flow failure, you can take that first trade as a risk. Maybe you can consider it risky, but if you got enough data behind it to feel confident in it, you take this one. You know that the order flow is shifting. You keep stacking longs every time price pulls back into a valid demand zone, right? So again, here, right, that's our higher high, higher low. Price pulls back, higher high, right? And what you notice is, again, what? Price doesn't close above this high. So you can't consider that a higher high, which also means you cannot confirm this as a higher low. So what happens is price pulls back here. You get the body closure here. This becomes the higher low. Right? Does that make sense? I hope that makes sense. All right, that's your higher high. Right? And then what happens next? That's your higher high. This is your higher low. Why? Again, we'll map out all the breaks. Body closure, that's just the wick. Doesn't count. That's not a higher low. That's just liquidity. Here, right? Break, body closure, right? That's your higher low now. This is confirmed. And then you get a nice push to the upside, right? No pullbacks after that one, right? It comes back much, much later. Right? These are things that we have to keep in mind. It's like, again, catching the reversals on a counter trend trade can be really hard, but catching the pro trend move on a pro trend move is much easier. You can trust the analysis much more. So right, so what happens? Price then fails to take out the high. Now again, this is where something like a chalk comes into play. Is you can be a little bit more aggressive with that change in structure, change in character, and get into a short maybe earlier than you normally would. Because like if this is your high or low on this time frame, in order to confirm an actual short, you'd have to wait until the body closes right here and then you get into it, which is nothing wrong with that because you get a lot of moves. But until then, you're technically expecting a higher high, right? Because expectational order flow, you have this higher high right here. Where's a higher low? Higher lows down here. Because why? Nothing closed above this, right? If the body had closed right here, just right here, your new higher low would have been here, but it only wicked it, right? But again, a wick on a lower time frame is just a body closure. So play with it, see what you get out of it. This is hopefully eye-opening to some of you guys and how simple structure can really be. Now, one of the things that you do have to keep in mind is that sometimes when it comes to structure, there can be choppy price action where you get, you know, sell candles and buy candles, and you might be confused. You might say, well, is this, you know, is this my pullback or is this my pullback, right? Just kind of use more of a broad approach, like a generic approach like this, right? People might say, well, price pushed up and then it pulled back, and then pushed up and then it pulled back, it pushed up and it pulled back, and pushed up and it pulled back. You can do that. There's nothing wrong with that at all. But you have to understand, like, when you think about structure, this is a pullback to me, right? Because there's structure within it. This is just it's a pullback, but it's just a single candle, right? Or two candles. It's not like a proper structural pullback. But that being said, right, because we look at things from a supply and demand perspective, another way that you could have looked at this structure in here is like this, right? You could have done it where you said, okay, that's my higher high, higher low. I wouldn't really consider that one, but maybe this one, because, you know, it's a deeper pullback. It's still only one candle though. But maybe you could say this one, right? It's two candles. Maybe you can throw some kind of specifier on there like that, right? So we could do that, right? Because I know that these are valid demand. Price pushes up, price pushes down. That's our higher high, higher low situation. Higher high candle, higher high candle, higher high candle, higher high candle, right? We can say that as soon as price took out this low right here, that was our first level of expectational order flow failure, right? You can do it that way, right? And this would have been your break of structure to the downside, resulting in a lower low, right? Which also would have made this technically a lower high. And then once price tapped in, took out that level and wicked it, right? You could then essentially see this as potentially lower, as lower lows coming from this level. But it's risky. It's not risky. It's just you need to make sure that you're consistent with it, right? This is not something that I technically would do, so you know I can't say that for sure. But just be, you know, reasonable. Don't force anything, right? Just if this is how you do it normally, the way we've been doing it tonight, then I wouldn't consider this higher high, higher low situation, and then use that as a break to the downside, right? But I digress. Anyways. So I hope that you guys have gotten a lot out of this. It's really important to understand this in terms of structure. And I think it helps with kind of like your confidence levels. It definitely helps with mine. You know, having this kind of expectational order flow, understanding that price, there's an expectation when price does something. If we make that higher high, this higher low should not fail. It should remain intact, right? This one, right? This high broke right here. This one should remain intact. Price should not drop below it. And if it does, we need to ask ourselves what's happening in the structure. What did it tap into? Did it tap into a higher time frame demand or higher time frame supply zone, right? These are the things that we want to be aware of, so that way when we are looking for that kind of directional bias, we can have some confidence in it. It's like the last thing we got was a higher high. Price is pulling back into demand right now. If maybe on the 15-minute prices shifted to the downside, I can take that counter trend pullback, But ultimately, I really want to get myself in those long positions because I know that this high is probably going to fail. Yes, I might get stuck in a complex pullback. If I do, I break even on a trade, maybe. It's not a big deal. But if it runs and it rips the high, you could be done for the month. You know what I mean? So with that being said, I'm going to close the video out here. Obviously, if you have any questions on expectational order flow at all, just shoot them my way. You know, again, be lenient with your structure like this. Again, right here, we have higher high, higher low, higher high, higher low, right? Just in this little pullback. If you see something like this and you want to say, well, I might want to consider that, what you need to do is you just need to go to lower time frame and map it out in the lower time frame. Because again, right, if we look, more often than not, what we have is we have something like this on the higher time frame, and then on the lower time frames, we have something like this, right? Right, where we get that expectation order flow shift, and then price does this, right? And then even on the lower time frame, right? Like you might have mid time frame and lower time frame where this happens, right? You're then going to go ahead and do the same. You're going to do more because on every single leg, everything is fractal. So you might have something like this, right? These are the kind of things that we have to keep in mind, right? If the structure is unclear on the higher time frame, drop down to a more detailed time frame and map out your expectational order flow. But use caution as you get into the lower time frames, like the 1 minute, the 5 minute, etc., because you're going to get a lot more failures. You're going to get a lot more fluctuation in that order flow, and you don't want to find yourself staring at the 1 minute, looking at expectational order flow. You're gonna lose it. It's not going to make any sense, right? So typically for me, I stick to weekly, daily, 4 hour and 15 minute expectational order flow, and then even then the 15 minute can sometimes throw you for a spin, and if it looks unclear, it's probably because you need to understand what higher time frame supply or demand zone is coming into. But anyway, I'm gonna leave it there. I will catch you guys later. I hope this video helps you guys out, and yeah, shoot me any questions if you have it. Any feedback is also much appreciated on any of the videos that we do, so that way we can make sure we keep giving you guys the content that you need to boost your confidence and improve your trading. All right, catch you guys later.